Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Friday, the 3rd of June. Starting off with the FTSE 100, and it looks as though this market's sweating it out almost as much as Mr. Cameron did yesterday. 6150, the notional support here in the bottom of the range at the 200-day moving average and this uptrend line from January, and 6300 recent highs. You can trade the range or wait for the big breakout, which at this stage, with the RSI now just back below 50, is flagged as being to the downside. But obviously, as we've seen since March, this is a market that's been going absolutely nowhere. Median level around 61 to 6200. So we are just maintaining that in a wait and see mode. Onto the DAX, and more action here, but it's still tough going in terms of working out exactly which direction is going to win. The big impulsive move here was the gap through the 200-day moving average at the middle of last month or towards the end of last month. Top of the gap is at 10,077. And while we're above that, in theory, we'd be buying the dips rather than selling strength. But it's a range of effectively down to the gap, 10,077 up to 10,365, the recent high. And one would expect it to be quite erratic between those two levels. But the difference between this market and the FTSE is that we've got the RSI at 55, which does give us a positive momentum, especially when added to that gap through the 200-day moving average. So on that basis, one would suggest that the FTSE is being suppressed by other factors. Onto the Dow, and here looking more chirpy, given the way that we've had a 2-day bounce off the 50-day moving average at 17,749. A little bull flag really either side of that 50-day line. That would suggest that the next move here will be to the upside. The RSI rebound above neutral 50 to leave it at 55 also suggests that. And all we've got is this resistance line there from April, running through 17,900. Above that would give us the long-awaited journey towards 19,000. Stop loss at this stage the same as it has been for a couple of months, i.e. sustained price action back below 17,500 and the floor of the January uptrend line, uptrend channel. Going on to the S&P, and a cleaner picture here. Looks like it's ready to push higher. Support here at the 50-day moving average 2069 and the floor of this rising February price channel, and the target as high as 2200. Any dips initially, at least, towards the 50-day line, maybe on bad payroll numbers, etc., would be regarded as a buying opportunity. Moving on to the NASDAQ, and this is also in the bullish zone. We've just had a golden cross between the 10 and 50-day moving averages to start June, and really while we're above the 50-day line, 44.39, looks like a clear run towards 4,800 at the February price channel top. Currencies, starting off with cable, and here rather more sickly. That key reversal down at the end of the month on bad Remain poll numbers suggests that the 50-day moving average will struggle to hold at current levels. And even if we do head higher, there is the chance of an intraday dip towards the floor of this rising trend channel from January at $1.43. The other point to note is the way that with that key reversal to the downside, we snapped this extended uptrend line in the RSI window from January, and that could be quite a sharp leading indicator on future downside. In fact, that rising trend line there, which marks the top of the channel, does look rather defunct now, with probably the reality being that we've got a line coming in from December as resistance, which is blocking further progress. Onto the euro, and here we see the way that got support at the 200-day moving average 110.95. Above that one would be a buyer on dips. Might be better to see the RSI get back above 50 for cautious traders, and even a break back above the 20-day moving average at 112.34. But dips towards the 200-day line regarded as buying opportunities, especially as that tallies with the floor of this rising trend channel from November. Upside initially up to the 50-day moving average at 113.05. Dollar yen, Still coming off that 110, 111 plus handle, broken back below the 20-day moving average as well, and the 50-day lines by rather quickly as well. So below the 109.50 area, really looking for an acceleration to the downside now to start chasing that previous support for this market below 106. Finishing off with gold, and gold a bit difficult, not either here nor there, but 1200 zone support. Below that, and especially while we're below, we get below 1208, which was the March floor, we could head back towards 1164. But still, this is regarded as a dip buying opportunity with an overall break to the upside rather than any extended topping out for this market. If you're cautious on this, then you'd probably wait for at least an end of day close above the 10-day moving average at 1218. That's it for me. More updates at the same time on Monday.